Hi everyone. So in today's video we are going to do chapter 18 quiz. Previously we have solved up to chapter 17. So here we go, and this one is the last chapter quiz. So first question is, which one of the following factor could cause the company gross profit percentage on sales to fall below than expected level? So do you remember the gross profit margin formula? It's gross profit divided by sales. So if the upper part of the ratio is increasing, in that case our whole ratio will increase. But if lower part of the ratio is increasing, in that case the whole ratio will decrease, and same will be for the vice versa. The first one is your overstatement of the opening inventory valuation. See, opening inventory is a part of the cost of sales, and if the opening inventory has been shown more, that means our cost of sales has also been shown more. And if the cost of part is overstated, in that case our gross profit margin will be lower, and gross profit will be lower, and the gross profit being lower means our gross profit margin will fall. Okay, so one is correct. So as we got to know one is correct, in that case option C and D is out. And one more thing, you can see there is no statement 4 is in A and B, that means 4 is also out. Okay, so in the exam you can find the right answer by evaluating like this as well. So second one is your correct inclusion in the purchase of invoice relating to the good received from supplier in the following period. So incorrect inclusion. So basically the following period's purchase has been included in the current year. So again it will increase the purchase, and if it will increase the purchase being the part of cost of sales, the cost of sales will also rise, and once again the gross profit margin will fall, because we deduct this cost of sales from this revenue, that will lead to gross profit. And if our cost of sale is more, in that case there will be less gross profit. So again this will lead to the fall in the gross profit margin. So our option A is correct. It's 1 and 2. But let's evaluate 3 and 4 to have a clarity why it is incorrect. Third, incorrect inclusion in the sales of invoice relating to good dispatched to the customer in the following period. So this will impact to the sales. Due to this the sales will increase, and being the sales is increasing, our gross profit margin will also increase. So there is direct relationship between sales and the gross profit, and indirect relationship between cost of sales and the gross profit. So it will increase the GP margin, not fall. So that's why 3 is incorrect. And the last is increased discount received from supplier. So that means your purchase will be lower. Being a purchase lower means cost of sales is lower, and cost of sales lower means your GP will be more. So that's why it's again incorrect. Now next, B. A company P&L for the year showed a company capital structure at the year end. Okay, they have provided. So what is the return on the capital employed? So formula for the return on capital employed is your operating profit. Operating profit is your 88, and divide by your capital structure, that means your equity and the liability both. So adding all these will lead to your 480. So divide by 480 and multiply it by 100. This will give you percentage, which is 18, and either is option B. All right. Third, to the following is an extract from the statement of profit or loss of a business for the year ended 30 September 20x6. Okay, to the nearest day, how many days sales are held in the closing inventory? So basically question is asking regarding your inventory days. So formula for inventory days, your closing inventory divided by cost of sales, which is 40, and multiply it by 365. That give me 73. Okay, it's quite easy. By using the formula you can come to your right answer. Now the second last, which of the following factor would cause company gearing ratio fall? So I hope you guys remember the formula for the gearing ratio, debt by equity or debt divided by debt plus equity, right? So first one is 1-for-1 bonus issue of ordinary share. See, bonus issue will don't impact your gearing ratio. Why? Because we are simply deducting the sales share premium and increasing our share capital, so it will have no impact. So one is incorrect. So as we got to know one is incorrect, that means A and B is incorrect. All right. Either answer could be C or D. Now second, 142 right issue for ordinary share. Yes, right issue will increase your share capital as your equity portion will increase. So ratio, lower part of the ratio will increase. That means your gearing ratio will fall. So just remember, if the upper part of the ratio is increasing, it's a direct relationship between the ratio. But if the lower part is increasing or decreasing, there is indirect relationship. Okay, so if right issue has been done, that means your lower part of the ratio will increase, and as there is indirect relationship, means overall ratio will fall. So this will lead to the cause in the fall of your gearing ratio. So as we got to know 2 is right, so in D there is no 2, so C is our correct answer. But let's evaluate 3 and 4 as well. An issue of loan note. Yeah, if we issue the loan note, our debt will increase and the upper part of the ratio is increasing. So being the upper part of ratio is increasing, as there is direct relationship, so that means our whole ratio will increase, but the question is asking regarding the fall, so that's why it's incorrect. Now again, last, upward revaluation of land and building. Yes, revaluation is being the part of the equity. If it will increase, the lower part of ratio will increase, and as I said, there is indirect relationship that lead to the fall in the ratio. Now the last, which is one of the following could improve company gearing? Restructuring of the loan to obtain a lower interest rate. Again, if we are taking the loan, there is no increase. I mean, even though interest rate is changed, but still our gearing ratio will not improve. Okay. Now B, making a bonus issue of ordinary share. As I said, there will be no impact due to the bonus issue on the gearing ratio or in the equity portions. So revaluation of the property upward. Yeah, if we revalue the property upward, our equity portion will increase, and equity portion being the part of the lower part of the ratio, so it will decrease overall gearing ratio. I mean, improve the overall ratio. That means C is our correct answer. Paying supplier more quickly. So paying supplier is a part of the current liability, and there is no relationship between the gearing and the current liabilities. So that's why it's incorrect. So now we are done with the whole chapter quiz. In next video, we will be starting the practicing questions. So stay tuned with my channel for more video like this.